Okay. So our topic for today class would be PAS 20, the standard on accounting for government grants and disclosure of government assistance. Okay. So from the title itself, class, and if we read the first paragraph as to the scope, class, the standard will be applied in accounting for and in the disclosure of government grants and in the disclosure of other forms of government assistance. There's a lot for us to take away from this single sentence, class. Number one, it will only be the government grants, class, that will require an accounting treatment on the part of the reporting entities. Okay, we will explain later why that is the case, but the reason is very simple. It would only be the government grant that will have an effect on the elements of the financial statements. By the way, at this point, you should already be familiar of the elements of the financial statements, class. The broad classes of elements of the financial statements are your assets, liabilities, equity, income, and expenses. Okay, so only a government grant, only an arrangement that will qualify as a government grant will have an effect on the elements of the financial statements. And that is why it will be the one that will require an accounting treatment. Okay. Whereas the other forms of government assistance can only will only result in disclosure. Okay. But that is, of course, if there is a need to make those disclosures as will be prescribed by this standard. Okay. What I am saying, class, is that a government grant is also or is actually a form of a government assistance. Okay, so you can think of government assistance as a broader concept, and government assistance can be classified as a government grant. Okay, but please understand that not all government assistance will be considered as government grants. Okay, so all government grants are a form of a government assistance, but not all government assistance will be considered as a government grant. Okay, so government grant will require uh, recognition on the part of the reporting entity. That's why there has to be a standard that will govern the accounting treatment for government grants. For other government assistance class that do not qualify as a government grant, then depending upon the situation, it may result in a required disclosure. Okay, but we can actually expand our understanding of government assistance class so that it could actually be grouped into three. Okay, that we could split government assistance into three. Okay, uh, again, the broad concept here is government assistance. Okay, and a government assistance can be a government grant. Okay, another another group of government assistance could be your those that will only require disclosure. Okay, and the third group would be those that will not require any disclosure. Okay, but if we go by the definition of uh, the standard class, the third group actually will not be considered as a government assistance. But if we're going to go after the literal interpretation of the term government assistance, meaning any assistance that is provided by the government, okay, then we can actually split it into three. But if we are going by the definition provided by the standard, government assistance can either be government grants or those that do not qualify as a government grant. Okay, so of course, your tests would be on your knowledge about the standard. So if you will be asked how government assistance are going to be grouped or classified, it's either a government grant or uh, other forms of government assistance. Okay, but again, please understand that a government grant is a form of assistance from the government. Okay. Okay. Then, if we continue further, class, again, government assistance can be government grant or other forms of government assistance. And under your government grant class, we will also have two kinds of government grants, grants related to asset and grants related to income. We will go over the definitions later on. Okay, but now moving on, I would want to transfer our focus now as to what will be covered by uh, past 20. Okay, so definitely at this point you already have an idea on how to spot provisions in the standard class that would be a good source of a multiple choice question. Okay, so paragraph 2 here would be a good source for a multiple choice question. You would be asked which of the following is covered by past 20, and you have here A, B, C, and D. Sorry, which is not covered by past 20. Okay, and you will have here A, B, C, and D. Okay, so if this would be transformed into a multiple choice question, which of the following is covered by past 20? So out of these four, one may be replaced by a certain type of transaction that is covered by past 20. Because again, the enumeration here are the instances that are not, or the type of transactions that are not covered by past 20. And I want you to give special attention to enumeration letter D class, government grants covered by past 41. Okay. Again, I have told you before that once you become familiar with the different standards, it would be very easy for you to remember whether a certain transaction is covered by a particular uh, standard or not. But here, there's a possibility class that will be a confusion on your part. You are dealing with an agriculture class. You're dealing with, for example, you're dealing with biological assets. Okay, but what if the entity is able to acquire the biological asset through a government grant? Then there is now a confusion on your part. We're dealing with a biological asset, but the problem is the entity was able to acquire these biological assets through a government grant. What standard will apply now? Will it be the standard on biological assets, which is past 41, or will it be past 20, the standard for government grants? And paragraph 2 is very explicit, class, that it tells us that past 20 does not deal with government grants covered by past 41. So there is actually no conflict, class. So if you are dealing with biological assets, class, it will be past 41 that will uh, apply. Okay. But of course, if you're dealing with another asset that is not covered by a separate standard, then we will have to apply past 20. Okay. So and by the way, for enumeration B class, I just want you to take note of the examples given here, which would again be a good source for a multiple choice uh, question. Okay. These items are not also covered by or governed by uh, past 20. Okay, paragraph B tells us that government assistance that is provided for an entity in the form of benefits that are available in determining taxable profit or tax loss, or are determined or limited on the basis of income tax liability. So this will not be covered by past 20. And the reason here, class, is mostly uh, these items would be available for everyone, class. This is not specific or unique to the reporting entity. And for such reason, it should not be considered as a government assistance as far as past 20 is concerned. Okay. Going by the definition, we're given the definition for government class, but the takeaway here is that uh, the standard can apply to a grant whether or not the grant is given by a local or a foreign government class. Okay. So this tells us that government refers to government agencies, and similar bodies, whether local, national, or international. Okay. Here, definition for government assistance, which is again the broader term. Government assistance is action by government designed to provide an economic benefit specific to an entity or range of entities qualifying under certain criteria. Okay, so the important word here, class, is specific. Okay, specific to an entity or range of entities, class. Okay, it does not have to be one entity that is eligible only. It may be multiple entities, class, so long as there is a range set by certain criteria, class. Okay, if a certain benefit is derived from services provided by the government, class, that is available to everyone without discrimination, then that will not be considered as a government assistance as far as past 20 is concerned. Okay. Again, it's important for us to make a distinction, because if we're talking about a service provided by the government that is just available to everyone, then there is no need for the reporting entity to make disclosures in relation to those services provided by the government class. Okay. So the government assistance that we are talking of here that can either result in an accounting treatment or disclosure should be specific to an entity or range of entities. Okay, it cannot just be any one class. Okay, it can be a group of individuals or entities, but there has to be a qualifying factor class. There has to be a substantial distinction between this group of entities with those that are not qualified with for the government assistance. Okay. So the definition further tells us that government assistance for the purpose of the standard does not include benefits provided only indirectly, okay, through action affecting general trading conditions, such as the provision of infrastructure in development areas or the imposition of trading constraints on competitors. Again, these will not be the examples given here will not be considered as a government assistance. Therefore, there will be no need for us to make disclosures on these types of benefits derived from actions from the government. Okay. Government grants class, by definition, are assistance by the government. Okay, so it should be clear to you that government grants are a form of a government assistance. So government grants are assistance by government in the form of transfers of resources to an entity in return for past or future compliance with certain conditions relating to the operating activities of the entity. So by definition, class, uh, government grant is a form of a government assistance that will result in a transfer of resources. Okay, and because it will result in a transfer of resources class, definitely the assets class and to some extent the liabilities of the uh, entity class, the beneficiary, would be affected, and hence it will require recognition on our part, and thus there is a need for the standard to prescribe an accounting treatment. Okay, so definitely not all government assistance class will result in the transfer of resources. So that is why there are government assistance, even if it qualifies in the definition of the standard, will still not result in an accounting treatment. Okay. So what kind of government assistance will require recognition and accounting treatment? Only your government grants, because only your government grants are the type of government assistance that result in a transfer of resources. Okay. And just as a reminder class, for those students who will not bother studying class, will not bother reading the assigned text class, even a very simple question can become difficult or tricky because they will just try to work through the question by reading the question and the choices. Okay. So many students would get this wrong. For those who really did not bother learning anything for past 20 class, the question will simply give you the definition of uh, government grant. Okay. Sorry. Yeah. The question will give you the definition of the government grant. And the choices would be terminologies. Okay. Of course, the correct answer would be government grant. Letter A, government grant. Letter B, government assistance. Letter C, government subsidy. Letter D, some other terms, alternative terms for government grant. Uh, Sorry, the other choices should not refer to government grant. Okay, but basically the student will just be choosing between government grant and government assistance. But for some students class who really did not bother learning anything for past 20, as they go over the definition class, okay, they would read blank are assistance by the government. Okay, and since they did not bother learning anything specific for past 20 class, as they look at the choices, they see government assistance in the choice, then they would say, perhaps this is already the answer, that this is a giveaway question. The definition already tells us that these are assistance by the government, then definitely the answer would be government assistance. Okay, and that would be wrong. Okay, and the reason class that the definition includes the phrase assistance by the government It's because government grant is a form of assistance or is a form of government assistance. Okay. So the point here, class, is that please do not commit that mistake that you are given the definition of government grant and you would still answer government assistance. Okay, the question is very simple. As long as you're familiar with the definition, that should not be considered as a tricky or difficult question. Okay. So again, I'm telling you that's a likely scenario. Many students, when given the definition of government grant, would think that the definition pertains to government assistance simply by working on the context of the definition. Okay, but that's wrong. Okay, please remember that the definition of government grant includes the phrase assistance by the government because government grant is a form of a government assistance. Okay, so that's a very simple question, class. But again, many students would get that wrong. Students do not bother preparing for the examinations. Okay, as I've mentioned earlier, class, government grants can be uh, classified into two: grants related to assets and grants related to income. By definition, grants related to assets are government grants whose primary condition is that an entity qualifying for them should purchase, construct, or otherwise acquire long-term assets. Okay, so if the grant will impose a condition that the entity will have to acquire, class, construct, or purchase a long-term asset class, then that would be considered as a grant related to asset. Okay, that's not confusing, class. That's not difficult to understand. Okay, the second type of grant is your grant related to income, and this is where students again who do not bother reading the text would get it wrong. They would think if grants related to assets are those that would require the acquisition of an asset, then simple-minded thinking would say grants related to income are those that will result to income. That is wrong. Okay, grants related to income, class, is a residual definition. All government grants that do not qualify as a grant related to asset would be considered as a grant related to income. Okay, so please remember that. Okay, please do not uh, fall victim to minded thinking. Okay, grants related to assets are those that will require acquisition of an asset. Grants related to income are all those other than grants related to assets class. Okay, your grants related to income is a residual classification. If it's not a grant related to asset, then it will be considered as a grant related to income. Okay, we're given here with a for definition for forgivable loans class because if uh, the lender class would waive repayment of the loan, then that can be considered as a government grant. Okay. So here, the receipt of government assistance by an entity may be significant for the preparation of the financial statements for two reasons. First, if resources have been transferred, an appropriate method of accounting for the transfer must be found. Okay, and this is what we'll discuss later on. Second, it is desirable to give an indication of the extent to which the entity has benefited from such assistance during the reporting period, especially if you report the grant as an income class. If you do not provide information about the grants you have received, then the income that you will be reporting can be misleading. Okay, especially if a significant portion of your income comes from grants provided by the government. Okay, and by providing additional information from grants provided by the government, financial statement users will be able to uh, compare your financial statements from the previous period with a lot more ease. Okay, they will not be easily misled. They would be able to uh, filter out in their comparison and in their analysis the grants received during the period. Now, paragraph 6 class is important because definitions are commonly asked in this topic, and it's important for you to be familiar with the other names by which government grant may be referred to. Okay, you have here government subsidies, subventions, or premiums. Okay, so be familiar with the other terminologies for government grants. Okay, so paragraph 7 class uh, will tell us as to when the government grant should be recognized. Okay, government grants uh, shall not be recognized until there is reasonable assurance that the entity will comply with the conditions attaching to them and the grants will be received. Okay, one takeaway from this one is that the grants will have to be measured at that non-monetary grants will be measured at fair value. But as to the conditions before grants can be recognized, class, we have two: uh, that the entity will comply with the conditions attached to the grant and the grants will be received. Okay, please take note of the terminology, class. Okay, it did not say that the entity has already complied. What paragraph 7 tells us that the entity will comply. So definitely uh, this would not be quantifiable, class. This would be a declaration on the part of the beneficiary, which would be our reporting entity. And second, it does not tell us that the grants are already received. It just tells us that the grants will be received. Okay. So basically, class, if you're going to oversimplify the requirements, class, this just tells us that the government grants will be recognized when they are already receivable. Okay, when they are already receivable, because of course, uh, uh, the grant the grant will only be receivable once there is already an intention on the part of the beneficiary entity to comply with the requirements and the grant can be received. Because if you do not qualify, then definitely you cannot say that a grant will become receivable. Okay, but again, the standard tells us to uh, entity will comply and the grant will be received. To oversimplify, meaning it is receivable. Okay, but why do I want us to have that thinking that the government grants will be recognized when they are receivable? Because this would help you remember, class, that the recognition of government grant simply complies with accrual accounting. Okay, this does not follow the cash basis, wherein you will have to wait for the actual receipt of the grant before you recognize the grant. That's not how the government grants will be uh, recognized in accordance with PAS 20. Okay, the simplest rule to remember here is that PAS 20 complies or follows accrual accounting. The moment it becomes receivable, class, then it will be recognized. Okay, and very important takeaway here, class, which could be a good source for a true or false question. Okay, the receipt of a grant, class. Okay, even though the even though the government grant is already received, it does not mean that you can already recognize the government grant, because uh, it does not mean that you will be able to comply with the government grant. Okay, so please remember, not do not look at actual receipt. Okay, you determine whether the entity will comply with the conditions and whether the grants will be received. Okay, we do not follow cash basis in uh, government grants. Okay, so paragraph 10 tells us the one that I've mentioned, class. A forgivable loan from government is treated as a government grant when there is reasonable assurance that the entity will meet the terms for forgiveness of the loan. Okay, the benefit of a government loan at a below market rate of interest is treated as a government grant. So uh, another form of a government grant, class, is that the government did not forgive the loan entirely, class, but the government gave you a loan at a below market rate of interest. Okay, so the difference between the market rate and the rate given to you would be treated as the government grant, not the entire loan, but only the benefit that you receive. Because if it was at the market rate, you will be paying this much, but because it was given to you at the below market rate, then you're only paying a lower amount. The difference there would be treated as a government grant. When you discuss problems or computational problems in your intermediate accounting classes next semester, class, this would be good. an interesting source of problem class. The computation of the government grant from a government loan that is given at a below market rate. No problem with forgivable loans class. It's very easy for you to determine how much is the benefit because whatever is the outstanding liability, and since you will not be asked to pay for it anymore, then that would be your government grant. Okay, and then the succeeding paragraphs tells us on how to recognize the government grants. Okay, for assets received or acquired class, it would definitely be recognized as an asset. But as far as the government grant is concerned, how is it treated? Will it be treated as a reduction to the asset acquired, or will it be treated as an income? Okay, and actually those two are the options available to us, which we'll again discuss uh, in a short while. Okay, paragraph 12 tells us government grants shall be recognized in profit or loss on a systematic basis over the periods in which the entity recognizes as expense the related costs for which the grants are intended to uh, compensate. So, for example, a government grant is is related to an asset class, and you will have to construct an asset class. Okay, basically the arrangement is you construct this kind of an asset worth 20 million and the government will give you 10 million. Okay, so you would ask the question, why would the entity agree to that? Because the construction of the asset is part of the plans of the entity and will benefit the entity completely. Okay, but instead of spending or financing for it on their own, they will only need 10 million because the other 10 million will be financed by the government. Okay, so basically they are able to create an asset worth 20 million by only spending 10 million for it. Okay, but of course, construction of an asset could take time, and that is why the expenses related to the construction of the asset can go beyond more than one period. Okay, so the benefit that we receive from the government in our example is 10 million, but you do not recognize the entire 10 million on the first year class. You will have to allocate or spread out the 10 million in the same proportion class as the expenses related to construct the asset. Okay. So for example, it takes you 4 years to construct the asset class. Okay. So you spent the 20 million in 4 years, and assuming that you spent it equally class. Okay. So that's 5,000 for the next 5 million for the next 4 years. So you will recognize the grant class, not the 10 million grant, not all at once, okay, but you'd also spread it out in the next 4 years, okay, the period that it takes for us to construct the asset. And since we spent the 20 million cost of the asset equally, then uh, then the 10 million will also be recognized in the same proportion, meaning equally as well. So for the next 4 years, you recognize the grant at 2.5 million. That's 10 million divided by 4 years. Okay, what if the expenses are not incurred equally? What if 10% is incurred in year one, 40% is in year two, 20% is in year three, 30% is in year four? Then you will also recognize the 10 million government grant in those same percentages class. So 10% of the 10 million, 40% of the 10 million, so on and so forth. That's what paragraph 12 is telling us. Okay, government grants shall be recognized in profit or loss on a systematic basis over the periods in which the entity recognized as expense the rated cost for which the grants are intended to compensate. Okay, and the subsequent paragraphs are more on the specific arrangements class. Okay. Paragraph 13 tells us that there are two broad approaches to the accounting for government grants. The capital approach, uh, under which a grant is recognized outside profit or loss, and the income approach, under which a grant is recognized in profit or loss over one or more periods. Under the capital approach class, the grant will just be charged against the related asset. Under the income approach, then definitely the grant will be recognized as an income. Okay. Under the capital approach, it can either be considered as some sort of related capital or simply charged against the related asset. But again, it's okay if you cannot visualize this at this point, class. This will become clear when you discuss problems already. Okay, as far as we are concerned, it's important that you are aware of the two approaches, the capital approach and the income approach. Okay, so please go over paragraph 14 and 15 because this can be asked as a multiple choice question. What are the arguments in support of the capital approach and the income approach? Okay. Paragraph 16, we have already discussed the first sentence. Recognition of government grants in profit or loss on a receipt basis is not in accordance with accrual accounting assumption. We have mentioned this already. Okay, so even if you receive the grant upfront, class, please do not recognize it outright, especially if it's related to an asset or there is a requirement on the part on the entity's part to incur expenses uh, as a condition to the government grant. Okay. Uh, okay, so grants in recognition of specific expenses are recognized in profit or loss in the same period as the relevant expenses. So the grant, class, may not be for you to create an asset, but for you to just spend on certain activities. So the grant that you will receive should also be spread out in the same periods in which the expenses are, the relevant expenses are incurred, and also at the same proportion. Okay. Grants related to depreciable assets are usually recognized in profit or loss over the periods and in the proportion in which depreciation expense on those assets is recognized. Okay, so if the grant is related to a depreciable asset class, then you will also spread out the recognition of the government grant as an income class in the same rate as the depreciation on the related asset is recognized. So if the asset is being depreciated on a straight line basis, then that's very simple. You will also allocate or spread out the government grant equally over the life of the depreciable asset. But please take note, if the depreciable asset uses a different depreciation method class, just remember that the recognition of the grant should also be at the same rate. So if the depreciation method results in low depreciation expense for the early years and higher depreciation expense in the subsequent years, then the recognition of the grant should also be done in the same way. Smaller amounts in the early years and higher amounts in the subsequent years. Paragraph 18, grants related to non-depreciable asset may also require the fulfillment of certain obligations and would then be recognized in profit or loss over the periods that bear the cost of meeting the obligations. Okay, so this would just be similar to a grant that will require the entity to spend for certain expenditures. Okay, there's an example given there. A grant of land. The entity will receive a land, but conditioned upon the construction of a building on the site. Okay, so the grant income class, the grant income class should be spread out or recognized in at the same rate in which the building is being constructed. Okay, so paragraph 19 tells you that it's possible that the grant will have to be allocated class for different kinds of government grant, but that will rarely be an issue. Paragraph 20, a government grant that becomes receivable as compensation for expenses or losses already incurred or for the purpose of giving immediate financial support with no future related cost shall be recognized in profit or loss of the period in which it becomes receivable. So paragraph 20 class is some sort of an exemption to what we have discussed earlier. What we have established earlier was that If the grant is related to expenses or assets that will benefit more than one period, then the government grant will also have to be recognized in profit or loss in the same period class. But paragraph 20 tells us of an scenario class wherein the grant that is receivable class is compensation for expenses, meaning the expenses has already been incurred or losses have already been incurred, and the purpose is to give immediate financial support, meaning there are no additional obligations on your part. Since there are no more additional conditions class, then there's no need for us to spread out or allocate the amount of the grant. Okay, but the tricky thing here is, when do you recognize the grant? Okay, again, in paragraph 20, there is no more question as to the amount. Is it only a portion or is it the entirety? For paragraph 20, it will be the entirety. The question now is when. Do you recognize the grant when the grant is received, or do you recognize the grant when the grant is receivable? And paragraph 20 is very clear, and we have established this earlier already, class. Government grants are recognized when they are receivable. Okay, so for this kind of grant class, the moment they become receivable, as long as the purpose is to compensate for expenses that are already incurred, expenses or losses that are already incurred, or for the purpose of giving immediate financial support, even if you have not yet actually received the grant, as long as it is already receivable, then it will already be recognized in the profit or loss class. Okay, so again, the issue in paragraph 20 for this kind of government grant is not the amount. Okay, the issue is when. Paragraph 20 tells us when, and it is to be recognized when the grant becomes receivable. Okay, the alternative here, which would be incorrect, would be it will be recognized, the government grant will be recognized in profit or loss the moment it is received. That is incorrect. Okay, we follow accrual accounting. Paragraph 21, 22 is an elaboration of what we have discussed in paragraph 20. Paragraph 23, government grant may take the form of a transfer of a non-monetary asset, such as land or other resources, for the use of the entity. In these circumstances, it is usual to assess the fair value of the non-monetary asset and to account for both the grant and the asset at fair value. Okay, so it tells you that it is to be measured at fair value. An alternative course that is sometimes followed is to record both asset and grant at a nominal amount, meaning very insignificant amounts, which is the case also for your donated assets class. Okay, if you remember in past 16, this is somewhat similar. Now, as to the presentation class, presentation of grants related to assets. Government grants related to assets, including non-monetary grants at fair value, shall be presented in the statement of financial position, either by setting up the grant as deferred income or by deducting the grant in arriving at the carrying amount of the asset. This is what I mentioned earlier. If you use the deferred income approach, class, understand, class, that a deferred income is a form of a liability. And it will still be considered as a liability, okay, at first, because again, remember that there are grants that will have to be recognized as income throughout a certain number of years. So upon initial recognition, for example, it's related to a depreciable asset class. What's the rule for a grant related to depreciable asset? It should be recognized in profit or loss at the same rate as the depreciation expense on the asset. So definitely not the entire grant received would be recognized as an income outright. So at the start, it will be recognized as a deferred income. Okay, other term for deferred income would be unearned income. So in this case, it will start as a liability, it will start as a deferred income, and it will be gradually reclassified as an income class. Okay. Second alternative treatment is, instead of setting up a liability class, you will just deduct the amount of grant from the value of the asset to arrive at the carrying amount. So for example, in our previous example, let's say the building is worth 20 million, the grant is 10 million. As a rule, class, the carrying amount of your building should be the cost of the construction. So if the cost of construction is 20 million, as a rule following past 16, then the building should be reported at 20 million. But if the building was constructed as a condition to a government grant in which we have received 10 million, then the standard allows us to report the building at 10 million, which is 20 million cost minus the 10 million grant. Okay? And the grant here will still be reported as an income class in the profit or loss through the reduced depreciation expense. Okay, so the benefit received from the grant here will not be felt, will not be visible in the records directly, class, because we will not be reporting a grant income, unlike if you use a deferred income approach. But if you present it as a deduction to the carrying amount of the asset class, there will be no need for us to recognize a grant income. There will be no use for you to, you will not be using a grant income account, okay? But you would be able to feel that there is indeed a benefit class because your depreciation expense will now be based on the 10 million reduced carrying amount instead of the 20 million original cost. If you do not deduct it, class, then your depreciation expense on the building will be based on the 20 million, and that is okay because it will be, your profit or loss will not be significantly affected because at the same rate you will also be recognizing your grant income. Okay, but if you use the second approach, you do not report the building at 20 million, you will only report it at the reduced carrying amount, which in our case is 10 million. Okay, so in such case, class, the depreciation expense will now be based on the 10 million, which will definitely be lower had it been based on the cost of 20 million. So under the second approach, no grant income will be reported, class, but the benefit would still be felt because of the reduced depreciation expense. Okay. Under the first approach, depreciation expense will be high, but it's okay because we have another source of income. Under the second approach, no other source of income, but that is okay because our depreciation expense would be lower. Now, for presentation of grants related to income are presented as part of profit or loss, either separately or under a general heading such as other income. So either you have a separate account title for grant income class, or you just put it together under other income. Okay, your other income would be your catch-all basket class for other sources of income that will not be presented separately. Okay, please take note of the reasons or the arguments in support of presenting the grant as a separate line item, and for those in support of presenting it as part of your other income. Okay. Last class, repayment of government grants. This would be a good source for. This would be a source of an interesting problem, class. You have already received the government grant, class, and you have already recognized a portion of it in your profit or loss, but in the end, you were not able to comply with the requirements, or later on you became disqualified. So you will have to repay the grant that you have received, and there will be an issue. What will be the treatment? And supposedly it's going to be very simple, class. You will be informed as to how much uh, will be repaid. So that will be the amount of cash that you will have to give up. The bigger issue for repayment of government grants, class, is the amount of loss or gain on repayment that will be recognized. Okay, so repayment, and of course, remember, class, very important, a government grant that becomes repayable shall be accounted for as a change in accounting estimate. So this will relate to past 8. You might be asked, which of the following is a change in accounting estimate? Which of the following is a change in accounting policy? So you will remember that this will be treated as a change in accounting estimate. Okay, but here, repayment of a grant related to income shall be applied first against any unamortized deferred credit recognized in respect of the grant. To the extent that the repayment exceeds any such deferred credit, or when no credit exists, the repayment shall be recognized immediately in profit or loss. So, for example, class, we had deferred grant income in the amount of 10 million. But we were already able to recognize, recognize in our financial statements, in our statement of profit or loss in the previous year, the amount of 2 million. So that means there is remaining unearned grant income in the amount of 8 million. But for the current year, we became disqualified class and we had to repay or return the grant that we have received. So we will have to pay back the 10 million. The question is, will you be reporting a loss of 10 million as a result of the repayment? The answer is no. Because even though we will be paying 10 million class, we have only recognized in the past periods the amount of 2 million. So we will just offset the 10 million repayment with the unearned grant income in the amount of 8 million. So in this case, we will only be reporting a loss of repayment in the amount of 2 million. Okay. In the previous year, we reported income of 2 million, but because we will have to return the entire 10 million, we will have to give up 10 million. But our loss will not be the entire 10 million because we did not recognize the entire 10 million in the past. We only recognized 2 million. Okay. A possible issue here is for those that would think, uh, what if we just change the income reported in the previous year? We do not recognize the income of 2 million in the last year and instead report a loss of 10 million this year. Change the gain or income reported last year to zero and report loss of 10 million this year. Okay, that treatment class would be incorrect because remember that the repayment would be treated as a change in accounting estimate. And again, if it's a change in accounting estimate, you do not touch or you do not change anymore the amounts that were reported in the previous periods. Everything will be cleared or rectified in the current period. Okay. Uh, for grants related to asset class, repayment of a grant related to an asset shall be recognized by increasing the carrying amount of the asset or reducing the deferred income balance by the amount repayable. Okay. But again, you will just have to be familiar with the rules class. This would be more interesting if you are dealing already with the problem. So what you're supposed to remember is the rule for repayment for grant related to income. Apply it first to unamortized deferred credit, okay, or charge it against the deferred income, or simply you add it back to the carrying amount of the asset. If you use the second approach we discussed earlier, wherein you will deduct the value of the government grant from the carrying amount of the asset. Okay. So the option here would depend on the approach that you chose earlier, whether you treat it as a deferred income or you treat it as a deduction to the carrying amount. The treatment for the repayment would depend on the original accounting treatment for the government grant. Okay. So the government assistance, just take note of the different examples of government assistance here, class, that will not be considered as a government grant. So please take note of paragraph 35 and 36. Okay. Although it's rarely asked, but it's better if you be familiar with the required disclosures for PAS 20. There are only 3 class. Okay. There's no need for us to discuss the transitional provisions. So that would be it for PAS 20.